Let's have a look at the DAX. See if we can pull some money out of it. And I'll build the chart up and show you it in a moment.
Wait. Matron, take them away.
And a warm welcome to one and all. If this is your first time here, the copy obsessed scruffy trader. And what I'm trying to do is put trading in the real world. Maybe show you a trick or two along the way. So if that sounds good, do take a second to hit that little subscribe button. And if you find value, do crack the like or the super thanks. Genuinely keeps the channel running. So why the DAX? What is so clever about the DAX? Well, the DAX is a good instrument to trade because it's quite quick and it's very good with retracements. So if you are wrong, you can get out. But also, it's one of those markets that is genuinely market neutral because of those pullbacks. Doesn't matter what direction you go into the market, you can find a trade if you're patient. And patience is the king with it because you have to wait for the conditions to be right. This is something I was discussing this morning. Now, if I flick this over, I'll kind of highlight that. Here, the DAX. The title of the video was When Not to Trade, but within that video, which I put up earlier on this morning, I did explain what I'm going to be looking at right now, what I'm going to show in this video here. Because what I like to do is I like to back up what I talk about. And I always kind of give the guys a heads up. It's not a signal service or anything. It's just so they know what I'm doing before I do it. Personally, I think that's fair. And what they do with that information is up to themselves. Now, also, I build up things like this and it gets posted up for them all the time. And at the time, it was saying it's a sell. It's A grade, which means it's a good trade to look at because I grade them up A through D and I only look at A and B. Simple stuff. All right. So if they're not A and B, I just don't even bother looking at them. And then I'll look at it again a bit hour and that's kind of updated sort of top of each hour here. Okay. So where are we going with this? Well, where we're going is here into the chart itself. Because when I was looking at this chart, which is back here somewhere, it didn't have anywhere to go, you know. So I had to let it show its hand, all right? And its hand it's still down, but we've had that push up, but now it's coming back. So let us build this up a little bit and see what we're looking at. Well, we can see it's moved up. There was a colossal drop. It moved up. There was a sort of drop onto this shelf. Pushed. But when it pushed again, it didn't get to the top of this. All right. So that tells you that there's a sell-off coming, which is here. All right. So I'm quite interested in this. Now, you have this top section where it's at now, but it's broke through. So the next section is here, this bit. And there is some room because from there, 83 down to there, there's a good 20 pip move there and beyond. Okay. So that's interested me. What else can we see? Well, there's the move. It's all green, 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 green. But now we've got some good solid red coming in. Okay. And if we're going over these cluster points that we're looking at, that's just being highlighted on the hourly chart, there's good movement down into here. All right. So there's a half decent opportunity. And if it's pushing down aggressively, now if we draw a fib on this, fib is very good for marking this sort of thing out. Okay. We're coming very close to a 23. And the 23 lines up with this cluster point. Okay. So that is kind of a first to your target point for a short term. In other words, you're trading into the 23 to see what the reaction is here. Because if it's going to continue, it'll bounce here, here, or here. But in the meantime, it has to find those continuation bounce points. So I don't know if it's going to come here and bounce there, come to there and bounce up, or come to the 50 and bounce up. But on each one of these levels is a cluster. You can see it. So each one of them is valid. All right. So that's what the 4 hours telling me. It's telling me that the market is looking to probe to bounce. And these are the logical points. So we'll build it up. So we'll just put a line here. Actually, I tell you what, we'll not do it like that. We'll put a solid line in. I'll show you how to build it up. So we'll just to make it easy, we'll just put some black lines in, just so we can see some solid areas. Now, if you've already drawn in your support and resistance, this bit's a breeze. Okay, so I have 3 points of attraction here, based on a high time frame, which is a 4 hour. You know, if I come out to the daily, what's happening here? Well, this is interesting as well, because there is a gap. All right, there is the cluster, bang on where that is. That 50 marries up to that. Okay, see the point? And then when you look at the tails, they're there as well. So that 4 hour chart has actually told me something that happened on a daily chart. So if I work this down into an hourly, I've now got a framework to work on. I can see this. So I know this is the first stall point. So this is something I can target into. And if I'm targeting into it, I need a decent amount of pips to get there. Well, at the moment, there is about 30 pips on offer, give or take. I only want 10 to 20. You know, 20 pips, $5. It's not bad. You know, that'll pay you. 20 pips a tenner, definitely pay you. All right. But it all depends on what we're doing. So let's have a look. Do we have any motion here? Well, we kind of do. All right. So push that out. There's the tails. So put an order under this tail. So the price has to come to me. And we'll do that kind of now. And then we can always move the price up if we need to. Right, there we are. Okay, so it's tagged me in on the tail of that. Okay. So now what I can do is I can look at this section here. And if I need to, I can stage into it. In other words, add into the trade as it goes against you. Now it sounds stupid, but it's not stupid, because it means you're getting a better price. And that's all we're after all the time. We're always looking for better pricing. If you get better pricing, brilliant. You know, because I stage backwards into a trade, whereas a lot of people say, oh, well, the trade's going for you, add into it. No, doesn't work for me. Might work for you, but for me, I'd rather load up, because the market always goes against me. You know, at some point. Well, in this case, it didn't. It hardly went against me. It just went straight into profit. But now it's bouncing back. So what if that came to here? And I had an extra bit of my order there? Well, those two combined can make some decent money. And then as it pushes down into this target, it makes me more money. In other words, it's building up a position. Let me play this out, and I'll come back to you at the end. At the moment, I'm only going to target it. Well, let's have a look, see where we're up to. So that's 124. If I put a maximum target of about there, so just breaking the 200. It's just in case it slams down and hits it. But I'm expecting it to come to roughly this black line. I may bounce the price. Bouncing the price means taking partial profits and putting the order back in. That can build up a position as well. Really depends on how volatile the movements are, because if it does that, I'll be able to do it. If it just runs straight down onto here, not so much. Okay, but the trick with bouncing is you're doing it within the first 10 to 15 pips. All right, once it's moving and it's trucking, let it truck. Okay, so let's play it out, see what happens. Okay, guys, stop me out. Why did it stop me out? Well, as I was saying earlier on, these are clear bounce points. And as you can see, it came down to the level and it bounced off it. Because if you can read a chart and you can work out these points, they become very easy to trade and they become very easy to predict. Simple stuff. That line was put in as the last point of entry. In other words, I wanted 10 pips between there and there. Now, I can go back to market, and I probably will later on today to top up my wages. But in the process, it's paid me 122 quid for 20 minutes, if that, just by reading this. But also, it paid me relatively safely, because I knew when not to trade. In other words, I didn't let the market go against me that much. Okay, so there we go. Nice little quick one. Give you an idea of some of the silly things that I look at. And trading isn't that difficult once you get your head around it. But what I will say is trading is always common sense. If you're looking for big swings all the time, you're probably going to have big losses all the time. When you're day trading, treat it carefully. Get in, get out, get paid, be happy. And that's the best advice I can give you. All right. So if you're stuck, drop it in the description. You will find all my contact details of the Scruffy Squad, that sort of thing. And as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you on the next one.